Copy trades. I want to do a video analysis update of the stock market. We'll talk about the S&P, as well as Apple, Microsoft, AMD, and Nvidia, Qualcomm and Micron, Chevron, ExxonMobil and Disney, Jetblue, Platinum and Palladium, First Majestic Silver, Tesla, Enphase Energy, and NIO, Xpeng and Lee, the emerging markets, Wayfair, as well as Alibaba, Amazon, Facebook, PayPal, Shopify, Bitcoin, and Ethereum. So let's get right into it. SPY forms a wave 1 and a wave 2, then goes on a large wave 3, then an LE wave Furu said it would be at least the length of wave 1, places the wave 4 low from the election to right around this time last year, and 460 was hit. That looks like conservatively that ended a wave 3, and this is a wave 4 at the 38.2% fib. So if we're above 400, the length of wave 1 placed at the wave 4 low, says a minimum wave 5 target is about 550 for SPY. So we'll talk about Apple, SPY, and Microsoft giving a little, more conservative upside targets. But I think right now, I'll say right off the bat, the semiconductors like AMD, like Qualcomm, and kind of like Tesla, they really support a more aggressive view of the market, and they give, really meaningful, nice levels to the downside for tech. So here's Apple from this quad-witching low in September 2020. This is a wave 1 and a wave 2. This is a 1, 2, 3, 4, 5 wave 3 and a wave 4. So conservatively, wave 5 will be at least the length of wave 1 and place of the wave 4 low. I think a more accurate wave 5 target is wave 5 will be the length of wave 3, place of the wave 4 low. And that could take Apple all the way to about 216. The more conservative wave 5 target, which I don't think Apple would stop at, is 192. So that is because this is a wave 1 and a wave 2. This is a wave 3 and a wave 4 that ends right at the 50% fib. So if we're above 141, the length of wave 1 placed the wave 4 low says we're going to at least 192. A more aggressive and accurate wave 5 target is 216. We'll talk about why I prefer 216 with semis. Here is Microsoft, a very similar idea. Microsoft, by the way, I haven't seen this long-term chart in a long time. But anyway, this is Microsoft. It forms a wave 1 and a wave 2. It has a huge wave 3, and this is a wave 4 that ends right at the 50% fib. So the length of wave 1 placed at the wave 4 low gives a very conservative wave 5 target of 371. The reason that I think the 61.8% fib, even though it's a little wide of 254, the 61.8% fib, usually invalidates a wave 4. The length of wave 1 placed the wave 4 low is a little conservative of a wave 5 target of 370. A more accurate and aggressive target is the length of wave 3 placed at the wave 4 low, and that could take Microsoft in the bigger picture all the way up to the 420. So right around this time last year, I was talking a lot about Microsoft. I was talking a lot about Facebook and Nvidia, right? They were all over the bar chart, straddle and strangle screener. They had really nice Elliott wave setups, right? And people were saying, these POSs don't move, right? This POS doesn't move, right? It moved, and while you were calling it a POS, institutions were loading up the boat with cheap options, and they're doing the same thing right now with Qualcomm, Tesla, Apple. Just throw a dart at the tech sector. But anyway, this is a wave 1 and a wave 2. This is the wave 3 and a wave 4. They're playing a large move. It looks like at least it's a wave 5 up to the 370s. I think more accurately, it's a wave 5 all the way up to the 420. So a great piece of evidence that I'll touch on. There's an Elliott wave rule that says wave 5 must end with momentum divergence. So if we look at Microsoft right now, this is a wave 1 and a wave 2, and this is a wave 3 that not only makes a new high in price, it makes a new high on the weekly RSI. So anyway, I can't tell that to my broker, but that's one of those rules that's, pretty useful once you learn to recognize it. Anyway, here is AMD. AMD forms a huge 1, 2, 3, 4, 5 wave 1 from late May to, mid-May to late November. Right? Same dates as Tesla's rally, same dates as Datadog's rally. That means a lot of this could happen, 5-7 months from now. The end of the summer, I think we could see some of these targets hit. So here's AMD. This is a wave 1 and an ABC wave 2 that ends at the 61.8 to 78.6% fib. So I love the 78.6% fib of 92 as a level for market bulls to stay above. It's very similar to Tesla staying above 690. In this 5 to 7 month rally gets replicated for wave 3. That can take AMD conservatively, believe it or not, to 190 before a shallow wave 4 that retests the wave 1 high. Then wave 5 is at least the length of wave 1, places the wave 4 low. If wave 4 retests the wave 1 high, then ultimately the risk to the downside is 92. the reward potentially to the upside is the 250s. We can see why the MMs would load up a bunch of cheap options and kind of stroke some, bearish sentiment before a rally like that. Anyway, here is Nvidia. Nvidia forms a wave 1 and a wave 2, and we really don't care if this is another wave 1 and another wave 2, or if it's a wave 3 and a wave 4, because in Elliott wave theory, wave 5 is either the length of wave 1 or the length of wave 3 placed at the wave 4 low. So if I took the length of this wave 1 rally and placed it at the wave 4 low, Nvidia's wave 5 wouldn't make a new high. So one of the laws in Elliott wave theory, wave 5 has to break the wave 3 high. So I think this is a wave 1 and a wave 2, and this is a wave 3 and a wave 4. So even if this was another wave 1 and another wave 2, I'm still looking for the length of this rally placed at this low to take Nvidia up to the 430s. So wave 5 will either be the length of wave 1 or the length of wave 3 placed at the wave 4 low. It can't be the length of wave 1 or it wouldn't make a new high, so I think it'll be the length of wave 3 placed at the wave 4 low. If Nvidia is above 204 to 195, then I'm looking for a rally up into the 430s in the bigger picture, and that really lines up with AMD and Qualcomm. So if we're talking about potentially even a remote possibility that Tesla goes to the 1400s, that even eventually the 1900s, and that AMD goes to 190, right? Then Apple is probably not going to stop at 192, and Microsoft is probably not going to stop at 371. So that's why I prefer those wider, wave 5 targets that are the length of wave 3, taking Apple to 216 and Microsoft up to the 430s even, if a lot of this plays out. So here's Qualcomm. This is a wave 1 and a wave 2 on the larger degree, and this is a wave 3 and a wave 4. And during this time, both Tesla and Qualcomm were, 1, on the bar chart, straddle string of screener, but 2, the media was telling us, because I don't listen to them, but anyway, they were telling us that Tesla and Qualcomm were going to get obliterated because of the chip shortage, right? So this company's products getting a lot more expensive is going to make their stock price go down, right? That's what we were being told, and it didn't really play out that way. Well, think about that with Jetblue. But anyway, this is a wave 1 and a wave 2. I think this is a wave 3 and a wave 4. And the reason this is a wave 4 is because it ends at the 38.2% fib. So the length of wave 3 placed at the wave 4 low gives a wave 5 target of 232. I think a more useful count is just from this low. This is a wave 1 and an ABC wave 2. So 137 is extremely tight, but a great invalidation for not just Qualcomm, but a lot of market bulls in general is 122, and this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low gives a wave 3 target conservatively of 209. More aggressively and more accurately, wave 3 will be the 161.8% extension of wave 1. That is 236 before a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 placed at the wave 4 low can take Qualcomm all the way up into the 260s in the bigger picture, in the longer term cycles. But remember, AMD and Tesla support the idea that there could be a large rally where some of these minimum wave 3 targets are hit this summer. And I think for Qualcomm, it's at least going to see 209 to 236 this summer, if it's above 122 for now. So here is Micron. It's a little tighter level, but the bigger picture is quite similar. This is a wave 1 and a wave 2. Whether or not it's another wave 1 and another wave 2, or a wave 3 and a wave 4, the length of wave 3 or the length of wave 1 placed at this low gives the next target, and that could take, in the same way Qualcomm takes it to 232, it could take Micron to 121, and very similar to Qualcomm as well from this low. This is a wave 1 and an ABC wave 2, so if we're above 65, the beginning of wave 1, then that's a great invalidation for Micron, very similar to Qualcomm holding above 122. Anyway, here is Chevron. We'll talk about Chevron, ExxonMobil, and we'll talk about JetBlue as well, and Platinum. I really just want to focus on the long-term picture of oil right now for the sake of time in this video. I want to focus a little more on semiconductors and growth, but if we just look right now at Chevron, this is a 1, 2, 3, 4, 5, a big wave 1 that ends in the summer of 2014, right? And believe it or not, I have a post from February of 2021, a year before the big invasion, a year before all the CPI reports, that pointed out this was a wave 1 and a wave 2, and Chevron can go on a wave 3 in the longer term cycles, right? Everyone hates that word long term, right? But in the longer term cycles, I said Chevron could go on a huge wave 3 to 200, okay? And it's exploded above this wave 1 high. The point that I'm going to try to make is that ExxonMobil is still below the wave 1 2014 high. And by the way, Chevron isn't the only stock that's broken the 2014-2015 high. Anyway, Chevron has exploded above the exact same wave 1 high that ExxonMobil formed in the summer of 2014. The point is that everyone's complaining about gas right now. Okay? When we look at ExxonMobil and we look at Chevron, maybe it's not going to happen tomorrow, right? But gas is going to get a lot more expensive, right? Gas isn't done, and that means that protecting someone from inflation is a huge priority for me as an individual, okay? So anyway, this is a 1, 2, 3, 4, 5, wave 1 and wave 2, and we've seen Chevron explode above this high. So the 161.8% extension of wave 1 is 210. Okay, that's eventually, in the bigger picture, where a wave 3 can end. But we look at ExxonMobil right now, it's still below this exact same high that was formed in the summer of 2014. And this, in my opinion, is also a wave 1 high. So it's not going to happen tomorrow, but ExxonMobil is going above this wave 1 high. This is a wave 1 and a wave 2, so kind of the conservative wave 3 target is all the way up at 120. Even if there is a shallow wave 4 that retested the wave 1 high, if wave 5 was the length of wave 1, in the long term, ExxonMobil can go to the 190s, okay? So that is more than double the current price, and it's not going to happen tomorrow, okay? I hope it doesn't happen tomorrow. But unfortunately, if ExxonMobil gets to the 190s, then gas prices are going to go with it. So this is a very similar high, a very similar wave 1 high that JetBlue makes, right? And they always tell us that, when components of products get more expensive, that's bad for the company because it raises their costs. Well, it also raises their prices. Anyway, I'm not trying to get into fundamentals, but we watched gas prices get very expensive. I think we're about to see, let's look at some of these airline tickets, because transportation, in my opinion, is going to be the next thing that gets very expensive. So I personally am a little exposed to the automobile sector. So anyway, here's Disney. This is the long-term picture of Disney. It's the long-term picture of reopening and honestly streaming as well. This is a 1, 2, 3, 4, 5 big wave 1 and a wave 2. I think this is another wave 1 and another wave 2 that ended at the 50 to 61.8% fib for Disney. So if we look at the bigger picture, the length of wave 1 placed at the wave 2 low gives a minimum wave 3 target of 253 before a shallow wave 4 that retests the wave 1 high. Then wave 5 is the length of wave 1 placed at the wave 4 low. That can take Disney to the 320s. Okay, so that can take Disney to the 320s, and in my opinion, that would just end this red wave 3 on the all-time chart. There'd be a lot of consolidation, but ultimately Disney would continue higher after that. So anyway, that's the big bird view, right? It's a little bit of supporting evidence, in my opinion, with the airlines. But anyway, this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 for Disney. The length of wave 1 placed the wave 2 low. This wave 2 that ended at the 61.8% fib could take it to 252 before a shallow wave 4 and a wave 5 higher. So the kind of tighter level that I've been using for a long time is 126. I still think 126 is a great level to stay above. But since I mostly like Disney for a long-term idea, the 78.6% fib is a very wide level of 105. Now, normally if a stock has a low beta, that kind of deserves a tighter stop, in my opinion. So anyway, I like 126 for now, but I really like Disney for the long term, so the widest level is 105. Okay, I don't think it's going to come to that. I really don't. I think the reopening is really going to start to take off. And Disney is also in the streaming sector. So anyway, here is Disney. This is a 1, 2, 3, 4, 5. Sorry, this is JetBlue. Very similar to Disney and very similar to ExxonMobil and Chevron. It goes on a huge wave 1 that is subdivided into 5 waves, and this ends in 2015, not 2014, but I think there were some oil stocks that put in that high in 2015. Anyway, this is an ABC correction wave 2, and I think this is another wave 1 and another wave 2 that ended at the 61.8% fib. So the length of wave 1 places the wave 2 low. If we're above 9.89, can take JetBlue to 26 for a minimum wave 3 target. Ultimately, wave 3 can go all the way to the 161.8% extension of wave 1, which is all the way up at 31 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed the wave 4 low. If wave 4 retests the wave 1 high, can ultimately take JetBlue to 37, and that would just end this black wave 3 in the bigger picture. There'd be a lot of consolidation, but ultimately, I think JetBlue would be going higher. Here's platinum. I think this is a wave 1 and a wave 2 that ended at the 50 to 61.8% fib. All I really wanted to point out with palladium is that palladium's already broken this wave 1 high and confirmed it's got a lot more upside. I think platinum's really kind of the laggard metal right now that has a lot of upside. This is a wave 1 and a wave 2. So if platinum PPLT is above 83 to 80, the length of wave 1 placed the wave 2 low can take it to 151 before a shallow wave 4 and a wave 5 higher. So it would look something like this. The wave 3 could go all the way to the 161% extension, which is 164. That's basically the length of wave 1 placed at the wave 2 low, which is 151, before a shallow wave 4 and a wave 5 higher. If wave 4 goes to the 38.2 to 50% fib of wave 3, and then wave 5 is the length of wave 1 placed there, then we could see PPLT go to 202. I think we look at PALL, we can just kind of see the palladium's already broken out to a new all-time high. Gold, in a lot of foreign currencies, is already broken out to a new all-time high. Bitcoin and Russian ruble broke out to an all-time high. But anyway, I don't get carried away with that. But anyway, we have to find bear counts on palladium, right? And what's the bear count on palladium? I don't really think there's a great one. I think this is a wave 1 and a wave 2, and this is a huge wave 3 in progress. Even if, there's a large wave 3 and a wave 4 that retests the wave 1 high, wave 5 should be at least the length of wave 1 placed at the wave 4 low. So I think ultimately we're going to see palladium go to the 420s for PALL, and I think it's a big leading indicator for not just platinum, but for a lot of metals right now. I want to look at First Majestic Silver right now, because First Majestic Silver, this is kind of, one where I don't think it's going to work out where there's the war stocks and then there's the peace stocks. But it's a nice diversification thing. And I wasn't really worried about the war when I bought the metals. I wasn't thinking about the war. I was thinking about the options market, okay? But if there are war and peace stocks and the war stocks are good diversification, well, then First Majestic Silver is a lot of upside, okay? But I don't think it's going to end up playing out that way where the metals go up and the market goes down. I think what's going to happen is the metals and the market will move together over time. Okay, it's not going to happen, every single day that when SPY's up, gold's up, right? They're not going to, make an announcement that say, hey, the metals and the market are moving together. Okay, but I think over time, that's how it's going to play out. This is a wave 1 and a wave 2 for First Majestic. I think this is another wave 1 and another wave 2. If I connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, we have a beautiful Andrews pitchfork. This is the median. It's already kind of been confirmed. This is a nice pitchfork. Now the lower bound could be a wave 2. The length of wave 1 placed the wave 2 low. Says First Majestic is going back to the median. It's going to 29. And that means that a silver miner could do a lot of great things that won't be great for the average American when things get a lot more expensive, and the average global citizen, right? This isn't going to be good for anyone. But by the way, First Majestic Silver and B2 Gold are Canadian companies. And one point I'm going to make at the end of the video is that the emerging markets, the foreign stocks, yeah, they have a lot of growth stocks in the e-commerce sector and the clean energy sector, but unfortunately, for people who have bills, they also have a lot of stocks in the mining sector, in the oil sector, in the material sector, and those things are going to get very expensive. So here is Tesla. This is a 1, 2, 3, 4, 5 wave 1 and a wave 2. This is another wave 1 and an ABC wave 2 that ended at the 61.8 to 78.6% fib. The length of wave 1 placed the wave 2 low. Can take Tesla to 1400, and that's a minimum wave 3 target before a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 placed the wave 4 low can take Tesla to the 1900s for a 1, 2, 3, 4, 5 waves impulse. So I love 690 right now, but the widest invalidation for a further target is this low of 539. But I love 690 not just for Tesla but for market bulls and for a lot of clean energy bulls. Here is Enphase Energy. Enphase Energy is one of the biggest holdings of basically every clean energy ETF, especially for the previous stock and the next stock. It's in QCLN, which also holds a large amount of Tesla and a large amount of NIO. Anyway, this is a 1, 2, 3, 4, 5 waves impulse that forms a large wave 1 for Enphase Energy. This is an ABC wave 2. The length of wave 1 placed the wave 2 low, says that ultimately we can see Enphase Energy hold above 113, 112. And conservatively, it's going to go to 285 for wave 3. Realistically, wave 3 usually goes a lot further than just the marginal new high above the wave 1 high. But even if there is a wave 4 that retests the wave 1 high, the length of wave 1 placed at the wave 4 low is ultimately going to take Enphase energy to the 450s if it's above this low of 113. So that's because this is a wave 1 and a wave 2. This is a large wave 3. If wave 4 retests the wave 1 high, the length of wave 1 placed to the wave 4 low gives a wave 5 target of the 450s. So I love Enphase energy and I love Tesla to give great levels for NIO, Xpeng, and Li. If we look at NIO, Xpeng, and Li right now, we have to remember that they're clean energy stocks as well as Chinese stocks and foreign stocks. So this is a huge wave 1, right? A huge wave 1, and then a devastating ABC correction, right? Everyone's gotten called the B word, okay? And no, that's not the inappropriate B word. That's the word bag holder, right? We've all been called that. But sometimes in investing, for me, you gotta be willing to be called a bag holder, okay? And we'll look at Wayfair in a second, but this is a huge wave 1 and a wave 2. So if we're above 13, the length of wave 1 placed at the wave 2 low says at the very minimum, NIO's gonna explode above 66. And we can talk about much further targets that I'm not gonna say out loud right now when we get there, okay? But remember, the length of wave 1 placed at the wave 4 low, if wave 4 retests the wave 1 high, can do some stuff, okay? So let's look at Tesla. I think what's going on right now is that NIO is right here, okay? That's where I think NIO is. I could be wrong about that. Okay? That's why I think Tesla above 690 is a great level. That's why I think the Enphase energy holding the wave 1 low is a great level. But if we look at NIO right now, this is a wave 1 and a wave 2. And let's just get into it. Let's look at China. This is the Hang Seng, okay? So this is the Hang Seng, and be careful what you say right now. Be careful what you post right now. Be careful how bearish you are, because this is the 2007-2008 high. And the emerging markets in China are doing something very interesting. They both are breaking out and kind of back testing this from a classical perspective. But for the emerging markets, this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. And yes, I believe this is another wave 1 and another wave 2. So the reason that I can say 1, 2, 1, 2 this many times is because there are 9 degrees in Elliott wave theory, and this is the all-time chart. So there is a word for this. It's called a quadruple nest, because it's a 1, 2, 1, 2, 1, 2, 1, 2 Elliott wave nest. Remember, there's only 9 degrees, right? So I can't say 1, 2 too many more times. But if we just focus on the 2018 low, this is a wave 1 and a wave 2, and this is another wave 1 and another wave 2 for the emerging market ETF EEM. The length of wave 1 placed at the wave 2 low, which ended at the 61.8% retracement, can take EEM to 69 before a shallow wave 4 that retests the wave 1 high. Then wave 5 is the length of wave 1 placed at the wave 4 low. EEM can go to 87 in the long term. And that would just end this blue wave 3 within the cycle from the 2018 low. So if we're above 36, that's a great level to say this could be the part of the movie where the emerging markets and the foreign stocks follow what the S&P did for the past decade, okay? That's a theme that we see everywhere, and we see it in China, okay? So be careful what you post about China right now, because what we just talked about with EEM, wave 1, ABC, wave 2, 1, 2, 3, 4, 5, wave 1, and then I know you guys think equal lines are silly, but look at this little correction right here. From this high, A, B, C correction, and where's the correction end? Where the length of this orange line placed at this high ends, okay? That's called the one-to-one extension. And what it just do on the larger degree? This is a wave 1 and an A, B, C correction where the length of wave A placed the wave B high is where possibly wave C just ended a wave 1 and a wave 2 of a larger wave 1 and a wave 2 of a high that was broken in 2007 by the S&P and the NASDAQ that culminated in a rally that lasted for a decade, okay? This is a wave 1 and a wave 2 for the Hang Seng, and this could be an ABC correction where the length of wave A placed the wave B high is where wave C ends at the 61.8% retracement. So the length of wave 1 places the wave 2 low if we're above 15.5K for a very long-term idea. Says that the Hang Seng can go to 41,000. Okay, that is, checks note, double the current price for a conservative wave 3 target. Then there could be a shallow wave 4 that retests the wave 1 high before wave 5 is the length of wave 1 placed at the wave 4 low. If wave 5 is the length of wave 1 placed at the wave 4 low, then the Hang Seng can go to 56,000, and that would be 1, 2, 3, 4, 5 waves that completes a large degree of wave 3 that was put in 2008. Sometimes it's not about being called a bag holder tomorrow, okay? You know how many traders caught the S&P and the NASDAQ for 10 years? Very few. Most of them even shorted the rally the entire way up, okay? But how many people investing in their 401ks, just kind of buying every month, acting like they're, dumb, right? How many of them caught it? A lot, okay? This is one of those rallies that's going to occur, in my opinion, not just in China, but also in the emerging markets in general. So that's why I'm going to hold the Chinese growth stocks that I bought over time. I didn't go all in at once, okay? I bought Xpeng and Li, in March and May of 2021. I more recently started buying the e-commerce side of the Chinese market. If we look at Xpeng, this is a wave 1 and a wave 2, and I'm honestly never going to sell Xpeng or Li or Alibaba. And part of the kind of logic behind that is that they give me exposure to not just the Chinese market, but also the electric vehicles, the clean energy stocks, as well as the e-commerce stocks. So the way I see it is they have very high beta, so I can take smaller positions, get tons of exposure to those sectors. And if I am completely wrong and I never need it again, then I never need it again, and I never have to invest in these sectors again. And they're huge sectors, okay? So that'd be a good thing, but I don't think that's going to be the case. I think this is a wave 1 and a wave 2. I think that Xpeng will hold above 17 and go on an explosive wave 3 above this wave 1 high. So the way that I am kind of hedging and have been hedging for a little bit, the clean energy and the growth side of my portfolio is with straddles on ICLN. There are 2 lots right now. One lot was the 20 strike call and the 19 strike put for December of 2022. Another lot was the 21 strike call and the 20 strike put for December of 2022. So those are some option straddles that I'm using to hedge risk to the downside. But I think the call portion of those straddles are going to hit. And I think that Tesla and Enphase Energy are a great reason why. But that's kind of some of the hedging that I'm doing. And that's why another way that I can just kind of hold these for a long time. Because if clean energy crashes, then I have exposure until ICLN gets to 0. So anyway, here is Li. Very similar idea. Wave 1 and wave 2. This is another wave 1 and another wave 2. The 161.8% extension of wave 1 is 49 for Li if it holds above 15. So anyway, that's Li. That's Xpeng. And here is the emerging markets, and here's Wayfair. Wayfair is an e-commerce stock, and Wayfair didn't really go up today at all, right? So Wayfair, there's not really anything that was missed in my opinion. This is a wave 1 and a wave 2, right? And people think it's some conspiracy or some, tinfoil hat idea that the market makers are going to get retail out of the best opportunities, okay? That's not a, harebrained idea. That is just the reality of growth investing. If a stock has a high beta, and it really is going to be a wave 1 and a wave 2 that is followed by a massive rally, well, then they're going to get as many margin traders out of those names as they can. Go look at Amazon's chart. Go look at Netflix's chart. Go look at Bitcoin's chart. Go look at Nvidia's chart, okay? If you take a shot every time they have a 60% drawdown, a 50 to 70% drawdown, you're going to be in the ER, okay? Because they do that. And for Wayfair, it's a wave 1 and a wave 2. It's another wave 1 and an ABC wave 2. Between the 61.8 and 78.6% fib, this is 91. So if we're above that, the length of wave 1 places the wave 2 low can take Wayfair and Alibaba in the e-commerce sector and the Chinese growth stocks to 448 before shallow wave 4 and a wave 5 higher. So that's Wayfair. Here's Alibaba. I'm not really excited about a 40% update, but what I am excited about is that we could be forming Not just a massive weekly candle, not just a massive monthly candle, not just a massive quarterly candle, but also a massive yearly wick on Alibaba, on XYZ Chinese growth stock. Anyway, it's quad witching, baby. We can see a new group of leaders, not just in the spring, but in the summer. Not just even this year, but for a long time. Okay, so it's called being long for a reason. Exponential growth takes time. Okay, compounding reinvested dividends and value stocks takes time. Okay, everything takes time. No one really makes money playing the short term except for the people who sell options. And even people who sell options, compounding the gains from those, yes, takes time. It all takes time. Anyway, this is a wave 1 and a wave 2. The length of wave 1 placed the wave 2 low. So at the very minimum, Alibaba's going to go break above this wave 1 high and go to the 330s. That's a silly place to think that, wave 3 would end at 330. But even if there was a shallow wave 4 that retested the wave 1 high, the length of wave 1 placed the wave 4 low can take Alibaba to the 580s in the bigger picture. That's when I'll start scaling out. If I'm right, if I'm wrong, then, I'll read some stuff in all caps. Anyway, this is Amazon, wave 1, wave 2, huge wave 3, and an ABC wave 4. So these are the two largest holdings of ONLN. I talked about eBay recently, but anyway, the e-commerce sector is a lot of evidence for not just PayPal, not just Shopify, but Bitcoin and Ethereum as well. Okay, we're going to see that play out in my opinion. Anyway, 1, 2, wave 3, ABC wave 4 at the 38.2% fib. It's a little tight, but I like 2,700. I think we hold it. The length of wave 3 placed the wave 4 low says it won't just be Starbucks from my more recent post in XLY. It won't just be Tesla. Amazon itself will go on a wave 5 higher that is at least the length of wave 3 placed the wave 4 low. And consumer disco is going to be dancing until Amazon reaches 4,820 for a wave 5 target. That could end up being conservative. Here's Facebook. It's kind of it's definitely a social media stock, but it's also an e-commerce stock. Very cool e-commerce stock. Anyway, a lot of people, I don't invest in Facebook, right? I don't invest in Facebook because Facebook's unethical, right? There's no church in the wild, okay? And in this case, the wild's the market. There is, church in, the world. But in the market, you can't just say, I'm not going to invest in Facebook because they're unethical. Spoiler alert, all the companies are unethical, okay? Especially the ones that do really well. This is a wave 1 and a wave 2. This is another wave 1 and an ABC wave 2 that ends at the 78.6% fib, right? The only reason I say that is because I was posting a lot about Facebook right around this range, and someone commented, I would never invest in Facebook. I would never invest in Facebook because it's unethical. And I'm thinking, look at how iPhones are made. Anyway, this is a wave 1 and a wave 2. The length of wave 1 placed the wave 2 low says that Facebook is going to the 430s before a shallow wave 4 and a wave 5 higher. The MMs, right? We're competing against the MMs. The institutions, they don't have a moral conscience like that. Oh yeah, no, I'm not going to buy Facebook because they're unethical. Get out of here. If Facebook's next in the rotation, then you're going to be forced to buy it if you manage money for a living. Anyway, this is a wave 1 and a wave 2, so the minimum wave 3 target is 430. Now, the problem with Facebook isn't that it's unethical, it's that it doesn't have a great low to trade against. So, that kind of sucks, but this wave 1 low is 137. That's a great invalidation. If we're above that, the length of wave 1 placed the wave 2 low says that while the risk right now is kind of wide to the downside, 437 would be a minimum wave 3 target before a shallow wave 4 that retests the wave 1 high. Then wave 5 is the length of wave 1, placed the wave 4 low, and that could take Facebook to the 600s in the bigger picture. Sorry, I'm trying to watch my language in these. Anyway, this is PayPal. Facebook, I went on a rant about Facebook. I'm sorry about that. Anyway, this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. And I think that PayPal, it's just like Shopify, right? Just like, 7 months ago, we were all talking about how great these companies' fundamentals were, right? Moats and Kagers and Substacks. And now people are literally calling PayPal an SHIT coin. Wow. Anyway, this is a wave 1 and a wave 2. It's a wave 2 that ends at the 61.8 to 78.6% fib. So a wider level is 82. A wider level is this wave 2 low on the smaller degree of 82. A tighter level is 92. But here's what I really like about PayPal. One, if this is a wave 1 and a wave 2, then it going above 310 in the longer term cycles is a very silly minimum expectation for a wave 3. Wave 3 would go way further than 310, have a shallow wave 4 and a wave 5 higher. We don't really need to talk about that right now, right? I don't really like talking about price targets that are too much higher, right? Once it's above 500%, I'm just going to keep that to myself. But anyway, Shopify is literally the twin sister of PayPal, right? And everyone's looking for alpha, right? People just dedicate their lives. I have to have all the alpha, right? Give me alpha. Okay, this stock outperformed the market for 6 years, right? This literally, from its inception, has outperformed the market. So if someone's looking for alpha, maybe this one. Anyway, this is a wave 1 and a wave 2. If we're above 391, right, we're going to be talking about Shopify's moat, Shopify's CAGR, when it's up here. And honestly, the classical traders who say they only buy stocks at all-time highs, right? You only buy stocks at all-time highs. Okay. Anyway, this is a wave 1 and a wave 2. Conservatively, Shopify is going to make an all-time high. And honestly, the base breakout traders, which I love, they're going to make money because this is going to be a huge wave 3 to 2,234 before a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 places the wave 4 low. Says getting called a bag holder might be worth it because Shopify is going to 3,481 for waves 1, 2, 3, 4, and 5. And that's great news for two of these actual... Okay, I know Bitcoin's not technically an SHIT coin, but I think that calling PayPal a coin isn't going to be an insult in the future. Okay? Watch out for that. Watch out for calling something an SHIT coin not being an insult in the future, especially if that stock was PayPal. Anyway, really, I mean, it's moats and CAGRs, and then all of a sudden, boom, it's a dog. It's a dog. This POS doesn't move. Anyway, I'm just quoting everyone from last March. This is a 1, 2, 3, 4, 5 wave 1 and a wave 2. This is another wave 1 and another wave 2 for Bitcoin. So I believe we're going to enter wave 3 of wave 3. Conservatively, the wave 3 target is 73K before a shallow wave 4 that retests the wave 1 high. Then wave 5 is the length of wave 1 placed the wave 4 low. That can take Bitcoin to 109,000 to complete this red wave 3 on the all-time chart. And Ethereum, the short-term view, very similar idea. 1, 2, 3, 4, 5, wave 1 from the summer low. ABC wave 2 at the 78.6% fib. Tight would be 2,163 for this wave 2 low. Ethereum has an extremely high beta, right? They will get that stop. Anyway, 1709 is the invalidation for wave 1. The length of wave 1 places the wave 2 low. Says it's going to 5.3K before a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 places the wave 4 low. Says that calling PayPal and SHIT coin is going to be a big compliment when Ethereum is at 8,000.